investing in individual companies, because there's not all these other companies here, you have a potential to get higher returns as well too. It's all going to be dependent upon, you as a person and the goals you're trying to achieve, like I mentioned earlier.
Man, I'm living aspiration, cutting off heads, I'm straight with decapitation.
Good afternoon, everybody. Happy Sunday. I hope everybody's doing good. And if this is your first time tuning in, welcome. My name is Omar Bailey. I'm glad you stopped by, and I hope you enjoyed the video. So for today, this is another finance video. And for this one, what I wanted to discuss is how should you invest? And I had this question asked to me recently. I get asked this all the time, but recently on IG, and I told myself I would answer this question. How should you invest? And there's so many options out there, especially if you're new to investing. You're hearing people talk about cryptocurrency because it's the thing that's hot right now. You're trying to figure out, what do I invest in? Do I invest in stocks? What do I do? Like, how should I be investing my money? And I want to answer that question for you today. And there's different parts. It's not as simple as you may think, because it's quite different from person to person. What I find myself to think is a good investment may not be good for you. It may be too risky for you. It may not be something you're interested in. There's all these different things because it comes down to the individual as well too. So the first thing to help you find out how you should be investing and what to be investing in is you have to figure out your risk tolerance, right? And you want to know how much risk can you take. And this is different from person to person because we all have different life experiences, right? If you can tolerate a higher amount of risk, you may be able to invest in more riskier things, more volatile things, such as cryptocurrencies, growth stocks, which are companies that are expected to have high growth over the years. You have small cap stocks, which are stocks with a small amount of capitalization. I'm not going to get into the whole definition of it, but they're just small cap stocks and other investments like that, where if you have a lower risk tolerance, maybe you should be investing in more defensive stocks. Stocks like, for example, like a Johnson & Johnson, right? That's been here for so much time. They create products that we all use. It's not going nowhere. You're not going to expect too much volatility from it. But it'll keep you, it's for people with lower risk. And if you're somewhere in the middle, you might want to balance out between more riskier investments and less riskier investments as well. The next thing is that it all comes down to your goals at the same time, right? If you're into wanting to experience high growth, you're gonna have to invest more into growth stocks, companies, or assets that will provide you with high amount of growth over the years, right? Especially for somebody who's younger. Your goal is to start building wealth. So you also have time on your hand. You have a longer time horizon. So you can invest in things that are more growth oriented, right? You may be able to be a little bit more risky. And then if you're trying to build passive income, you want to start replacing your salary's income so that it comes from a more passive place. So now maybe you don't have to work as much as you used to, or you can start to do work for something you like that pays less, right? But now that you have that passive income coming in, you don't need the employer to pay you the same amount, for example. So now you may want to invest in more what we call dividend stocks that pay higher dividends, and you get this quarterly. And then if you might want to invest in real estate investment trusts. So instead of investing directly into real estate, you're doing it passively. You're investing in companies that invest in real estate, and there's different ones. We call these real estate investment trusts. Some of these even pay monthly, so you can get that monthly income starting to come in from your investments. So, and then there's different ones. Let's say you wanted to, if you preserve money, you wanted to minimize the amount of taxes because you're in a higher tax bracket. There's different assets that can be used for those specific goals, and that's going to start helping you see, what are some things you should be investing in, and that all plays a difference. So far we've covered risk tolerance, how much risk can you take, and then also your goals. The third thing you want to start thinking about as well too is, do you want to invest in individual stocks, or do you want to invest in like ETFs or mutual funds, right? So if you're investing more into individual companies, you're at a higher risk because you're putting more of your eggs into one basket or just one company. versus going into, let's say, an ETF that invests in, a bunch of different companies, and then you're buying into the fund, so you're getting access to all of these different companies. So an example I had used was, do you want to just invest into Apple by itself? Because investing in individual companies, because there's not all these other companies here, you have a potential to get higher returns as well too. Higher risk, higher return at the same time. And a lot of times with funds, you may not get the same growth because now there's a bunch of different companies. You have the good companies that are experiencing higher growth, but you may have some companies that experience normal growth. So it kind of balances out, but there's still a chance for high returns as well. But back to the example is that you can invest in Apple, or you can invest in, let's say, a US tech ETF that invests in different technology companies in America, Microsoft, Apple, Amazon, etc. And now you're getting access to all these different companies as well too. So, you're gonna have to ask yourself, do you want to invest more individually into individual companies, or just follow funds? And in these funds, there's specific objectives. So let's say, like I just used, you want to invest into tech companies, right? But you don't want to find out how many different, try to find each individual company and see if this person can do this. So you rather just invest in the whole tech industry itself, and there's funds for that. And it's the way I think a lot of people should be investing, because it's hard. One, a lot of companies are here today, gone tomorrow. Over time, not a lot of companies last, right? And at the same time, it's hard to keep finding which companies are going to be the winners, the cream of the crop. That's very hard to find, and it's a small percentage of companies. Especially if you're not into breaking down, like looking into financial statements and doing all of your research, things like that, right? It's tougher for you. So you may just want to do, let me just invest in the tech industry itself, because I'm getting the winners, and I may get some losers, but I have a nice balance here and there, and I'm not trying to figure out which company's doing this, which company's doing that, and then it's just more passively done. And then over time, even though it's the tech industry, let's say some companies fall off and new companies come in, it's automatically doing that for you. So you're just investing in the industry itself. So that's, a thing you want to figure out is, do you want to invest in individual companies, or do you want to do ETFs and mutual funds? I'm big on, especially with my clients, with ETFs as well too. They're a nice passive way to be investing. And it's a lot of diversification. It just makes life easier. And then I already had mentioned this, but the fourth thing is age, right? If you are younger, you have a longer time horizon, you can afford to be more volatile, and you can afford to risk in more riskier things than, let's say, somebody who is older, right? They may need that money to pass it on to the next generation and so forth. So they can't afford for their money to be so volatile, right? They need it to be a little bit more steady. So they wouldn't have a high portfolio engaged into like growth stocks and things like that. It would be balanced out. Maybe they have some bonds in there. Maybe they have a little bit of real estate here, etc. You see what I'm saying? Where you're younger, your portfolio can usually be more growth oriented. So that's the thing to also figure out for yourself as age as well too. And then the final thing is, like, I wanted to talk about how I invest for myself, is that when I invest, I usually, if I'm investing in individual companies, I try to find the leaders of their respective industries, and that they're well established, and that they have plans for the future as well, right? And I can see it. So I have different accounts that I use. Different accounts focused on growth, different accounts focused in on passive income, different account for short-term funds, emergency funds. Like, I have it split up for that, like that, and it works for me. That way on each account I can focus on a specific objective instead of trying to have it all in one, and I'm trying to do all these different things in them. So I like to keep it separate like that, and I like to break down what is my objective with this account. Is it growth? Okay, let's focus on that. If it's current passive income, okay, let me focus on passive income on this one instead of just one account. And that works for me. Like I said, investing is individualized, so once again, what I do may not work for everybody, and I don't recommend it for everybody. But there's things that you can learn from it, just like we can all learn from each other. But I also do research on companies, and even the funds that I invest in. I look at, what's the expense ratio? How much does it cost to invest in this fund? Is this going to cut down on my returns too much, etc.? You know, what do they usually hold? What is the fund's objective? If it's an individual company, I do the same thing as well too. And then with funds, you can actually see the net asset value, which is how much the fund is worth. So that way, when you're going out and you're on the, you're on the stock market and you're looking at prices, you can see, is this overvalued? Is this above its net asset value? And it just makes it easier to invest in them, because you can see when things are overvalued for it. You can see when it's undervalued, and it's straight there, instead of individual companies where you have to, kind of search for that. And especially if you don't have financial knowledge, you're not used to doing financial research, it can be harder for you. So that's, another thing that I do when I'm investing in individual or into funds. I'm always doing my research. And then I'm always trying to buy at a discount as well too. And I say this in previous videos, my margin of safety. We're never 100% correct. So I like to have a space between what it's worth and then what I actually buy it at, just to give it, because what it's worth is most times an estimate, especially with individual companies, we don't really know. So I like to have that space, room for error, because nobody's 100%. But the different things you can be investing in, like I said, is I'm not into it myself personally, but there's cryptocurrency that's available. You have stocks, and I said most people can use ETFs, which will be much easier for you. There's bonds, which is like debt instruments, right? You're giving a company money for projects or whatever they're using it for, and then you get paid interest on it, to make it quite simple. So, you have bonds, you have real estate investment trust that I talked about. If you don't want to buy directly into real estate, you can invest in real estate companies. And then how you allocate this is all going to be dependent upon, you as a person, the goals you're trying to achieve, like I mentioned earlier. And, if investing for yourself is not for everybody, I don't recommend it for everybody, but if you decide to do it, you'll figure out that balance that starts to work for you. Make sure you ask yourself those questions. And then if not, you can also discuss it with an advisor as well. So, I hope this helped out. And this is how you should invest, and questions you should ask yourself so you can get to what to exactly be investing in. And if you have any questions, please let me know. I'll be happy to go in detail about something that you're not clear on, or if you have any suggestions or things that you want to hear yourself, just let me know. And we'll continue talking. Thank you for stopping by. I appreciate it. And as always, I'll talk to y'all later. I'm out.
Pray when it's time to ride, I never crash like Susie. Lyrics make you woozy, inspired by Juicy. The way to branch out is to kill all of these loose